We are determined to continue to be data dependent, to decide meeting by meeting.
We are going meeting by meeting, but as I mentioned, a majority of us do feel that will be appropriate in the remaining 4 meetings of the year to begin to reduce rates again.
It will depend on the relative strength of the 3 inflation dynamics, and we need some more information to determine that.
I think the direction of interest rates continues to be downwards.
So we are keeping an eye on this financial stability risk in deciding the pace and the timing of the further cuts.
The world's top central bankers are sounding the alarm on the risks from rising protectionism to oil shocks and fractured supply chains. And with the Trump tariff deadline just days away, the stakes couldn't be higher. Well, this is Insight. I'm Haslinda Amin. President Trump is threatening to impose higher tariffs on trading partners and warns he won't delay the July 9th deadline. But some investors still think it's all just a negotiating tactic. As equity indexes sit near all-time highs and volatility evaporates, we speak to Nancy Tengler about what's at stake for markets as tariff uncertainty looms. Also ahead, Thailand in turmoil as its top court suspends the Prime Minister. We'll get analysis on the impact for Asia's worst performing market. Plus, an exclusive conversation with Apollo Hospital's MD Sunita Reddy on India's healthcare sector and why it's looking to spin off its health tech unit. Asian stocks taking a hit today as traders continue to keep an eye on tariff deals. President Trump says he won't delay the July 9th deadline for imposing higher levies on trading partners. He sounded optimistic about reaching agreement with India, saying it's possible to have a deal with lower tariffs if New Delhi allows U.S. companies to compete in their markets. But Japanese stocks are lower today after the president cast doubt on a deal with Japan.
No, I'm not. I'm not thinking about the pause. I'll be writing letters to a lot of countries, and I think you're just starting to understand the process. We've dealt with Japan. I'm not sure if we're going to make a deal. I doubt it with Japan. They're very tough.
Fed Chair Jerome Powell says the U.S. Central Bank probably would have cut rates further if it weren't for Trump's tariffs. Speaking at the ECB forum in Portugal, Powell maintained that they'll wait to see the effects of the levies, despite the president's persistent calls for immediate cuts.
In effect, we went on hold when we saw the size of the tariffs and essentially all inflation forecasts for the United States went up materially as a consequence of the tariffs. So we didn't overreact. In fact, we didn't react at all. We're simply taking some time. As long as the U.S. economy is in solid shape, we think the prudent thing to do is to wait and learn more and see what those effects might be. And again, they haven't really shown up. So for now, we're waiting.
Meanwhile, Bank of Japan Governor Kazuo Ueda says he's in no rush to raise borrowing costs, signaling a wait-and-see approach on monetary policy.
Headline inflation has been above 2% for almost 3 years, while what we call underlying inflation is still somewhat below 2%. That's the situation we are in. But if I could decompose it further, there's probably about 3 components to it. First, there's underlying inflation dictated by wage price dynamics, whereby increases in prices affect wages, which further affect prices, helped by resilient domestic demand. This component has been going up slowly. But as I said, it's still somewhat below 2%. Then there's going to be perhaps a second component, which will be the expected negative effects of possible tariffs on the economy and on prices. We are expecting this to take place, but we haven't seen that yet. There's a third component, which is a domestic supply shock generated by increases in food prices. Actually, this component accounts for about 50% of the headline inflation we've got at the moment. So netting these 3, we think the first component and the second component will produce a slow increase in underlying inflation toward 2% by end 26 or 27. The third component, food inflation, is going to subside toward the year end. So that we will be closely monitoring interplays between these three forces.
We also heard from Bank of Korea Governor Ri Chung-yong, who says the fears over tariffs are more about deflation than inflation.
Our current inflation is well stabilized around 2%, and we believe tariff tends to be deflationary rather than inflationary for three reasons. One is Korea is not likely to use retaliatory tariff. Second, we import 22% of our import from China, and recently export price of China has been falling at 5% a year for several years, and we believe that it will continue to do so. And at this moment, our growth rate is 0.8%, which is well below our potential growth rate. So aggregate demand pressure is much lower. So our problem is not the inflation itself, but the gross impact of tariff.
So what does that mean you'll do going forward?
Yeah, actually, we have been in an easing cycle, and we cut our interest rate 100 BP from last October, and we will continue to be in an easing cycle given our growth rate. But recently, financial stability risk has been rising, especially housing price in metropolitan area is increasing very fast. So we are keeping an eye on this financial stability risk in deciding the pace and the timing of the further cuts.
The biggest risk stemming from trades and protectionist measures?
You know, Korea has a quite export-driven economy. So whatever the global fragmentation has a serious impact, not only direct impact through the U.S. tariff, but also indirect impacts through China, Mexico, Canada. And we easily can, it really depends on what's going to happen on July 9th. We are actually waiting for the result, but we don't know what's going to happen. But for example, like if the tariff goes back to 26% retaliatory tariff that was announced in April 2nd, and then also with a lot of sectoral tariff which affect our economy, aluminum, steel, and cars, we can easily say that it has an impact larger than close to 1% in our GDP growth rate. And depending on how long it lasts, I think we have to adjust to the new supply chain, so the impact will be larger.
Bank of Korea Governor Ri Chung-yong there as part of the top-level central bankers panel in Sintra, moderated by our very own Francine Lacroix. Now let's bring in our guest. Nancy Tagler is CEO and CIO at Leffer Tangler Investments. Nancy, good to have you with us. You heard from all the central bankers, all sounding a note of caution, yet here we are when you take a look at the stock market hovering at record highs. Square that for us. I mean, are we underestimating the concerns, the challenges that the central bankers outlined there?
Well, Hislinda, I think the market has, for the most part, started to look past monetary policy. You've seen... You saw in the fall where the U.S. Federal Reserve raised rates 100 basis points, or I'm sorry, cut rates 100 basis points, and the market rate went in and sold off the 10-year, and the yield went up 100 basis points. So I do think that there is a certain amount of complacency around what the Fed's saying, because a lot of this information is backward looking. So once the Fed started to look backwards, they really got behind the curve on monetary policy. So if you look at the neutral rate and you look at what most investors think is a reasonable rate, we're behind the curve, and our rate should probably be lower. At least 50 to 100 basis points lower. So that's what I think you're seeing going on in the U.S. market. And then we got some numbers, some economic numbers today. The JOLTS numbers were pretty benign. Manufacturing continues to decelerate in the U.S., and which is somewhat ironic given that's one of the president's top priorities. But I think we're going to start to see companies supplant the lack of workers with robots. And we saw that from Amazon, who recently announced, 1 million robots, almost as many as the workers they have in the factories.
The thing is, Nancy, it took just 55 days for U.S. stocks to reverse the losses, the deep losses they saw back in May. And now they're trading at elevated PE levels. I think it's at 22, 23. I mean, surely there must be a correction coming.
Well, I think we probably will get a summer correction, Linda. We often do. I mean, pretty much every summer for the last 3 or 4, we've seen stocks pull back and sort of recalibrate. That's never a bad thing for the markets. But I do think the second half of the year is more likely to be a melt up than a melt down. There's $7 trillion in cash on the sidelines. The retail investor has been committed to the markets as well as corporate buyback desks, but institutional investors have been underweighted to equities. And I think it's really difficult to argue with the earnings growth, the margin expansion, and the revenue growth that we're going to continue to see from corporations really implementing all the new technologies, not just AI, but robotics, digitization, cloud computing. So I think this is one of those golden ages like we saw in the 1990s. And I was managing money in the 90s. We had 3% inflation. We had a Fed funds rate above 5%, yet that coexisted with robust stock price performance.
You're suggesting perhaps that U.S. exceptionalism will persist. What does that then mean for Asian equities, Asian markets?
Well, I think it depends on which part of Asia. I mean, I do think I think we will come to a resolution with Japan. This is how the president negotiates. It's not my first choice. It does create chaos and uncertainty. So you're seeing a little bit of sell-off in the Asian markets today. But in general, I think our partners, our trading partners, for the most part, are going to end up, just fine at the end. And I thought that the Korean Federal Reserve governor or chairman was on point. We have said that we thought that tariffs would be deflationary, could be deflationary, and I think we're starting to see the consensus come and join us, and that is a good thing, I think, given the high levels of inflation, at least we've seen in the U.S. and are continuing to see compared to the rest of the world.
I know that you take a 4- or 5-year term perspective when it comes to making your investments. I'm just wondering what tweaks you've made. What rotations have you done?
So, Linda, when we got the tariff tantrum, there were a number of technology stocks that sold off materially. And so we stepped in and added to those names. Companies like Microsoft, Oracle, even Broadcom and NVIDIA were names that we added to, as well as Palantir, and then, of course, the stock everyone loves to hate, which is Tesla. But we added that, we added to that name around 240, and even with current levels of volatility and uncertainty, the stock is trading well above that. We also added to some non-tech names like Goldman. We added to Home Depot, interestingly enough, and a number of the names that we think are best in class, TJ Maxx, and so we used the opportunity to build out our portfolios for the next 3 to 5 years. Now, many of those names are up 20 to 30% since we added to them. That's unusual, but we still think they have a ways to go. And so, I'll just say briefly, we won the 12 Best Ideas portfolio, and we launched a 5 for 25, and both of those strategies are well ahead of the S&P by leaps and bounds.
Nancy will delve deeper into the choices that you made in terms of your latest investments and those tweaks. But before we go to break, I'm just wondering, we talked about how you said fundamentals are pretty much intact, but now fundamentals are increasingly hard to interpret. I mean, how are you looking at risk rewards? How do you make your decisions now?
Well, Linda, if you're in a regime change, and we think we are in a regime change, the rules of valuation don't necessarily apply. Now, eventually they will. And that's what investors have to be careful of. But in the near term, it's really about the narrative. And we think the narrative around nuclear, quantum, and cloud computing will continue, and AI will continue to drive stock prices.
Nancy Hengtai, Leffer Tengler Investment CEO and CIO. Nancy Tengler is staying with us. Now, as we'll take a deep dive with Nancy into Tesla's mounting challenges, from struggling sales to the sudden end of Elon Musk's friendship with President Trump. Keep it here with us. This is Bloomberg. Well, Tesla shares fell after CEO Elon Musk reportedly assumed oversight of sales in Europe and the US following the departure of longtime deputy Omid Afshar. Sources say Senior VP Tom Tzu will continue to oversee Asia sales while also taking on global manufacturing operations. This comes as investors turn their attention back to Tesla's weak sales prospects following a brief rally on the back of its robo-taxi debut. Analysts expect about 389,000 vehicles to be delivered for the latest quarter, continuing a trend of double-digit year-on-year declines. Now, here's a quick look at how some of Tesla's Asian suppliers are trading today. Well, mostly in the red at the moment. This all comes as Musk also contends with a breakdown of his relationship with President Trump. The president now saying he'll look into deporting Musk in response to repeated criticism of his tax and spending legislation, and may have Doge investigate the billionaire as well.
Elon Musk is ripping into this bill again. Are you concerned that Republicans are going to be swayed by Musk and his money?
No, I don't think so. I think what's going to happen is Doge is going to look at Musk. And if Doge looks at Musk, we're going to save a fortune. Thank you very much, everybody. I don't think you should be playing that game with me.
Nancy Tangler is back with us. Nancy, Tesla, a buy or a sell?
This is a company that trades on Musk's whims. And in the near term, that's a problem. And it creates volatility. But in the long term, the vision really does play out. And so this is what you get with him. You get spats, you get manic activity. But that is what is behind and maybe even drives the creativity and innovation. Read his biography, Linda, and you will see that this is probably round 10. We were investors early days when he was sleeping on the factory floor for the first time. His board was an insider board. His senior people were resigning, and he was on Joe Rogan smoking an illegal substance and drinking whiskey. And it really looked grim. And it was right before he was either going to go bust or succeed, and he succeeded. So this is a man who sort of has a talent for teetering on the edge of disaster and then pulling back just in the nick of time.
But the thing is, Tesla trading what? Minus 25% year to date, and weak sales are expected. It's losing ground around the world. There's so much animosity between him and the president as well, who's going to be in power for the next 4 years at least. There are lots of factors working against Musk and Tesla.
Yeah, well, you're absolutely right on that, Linda. And I think the irony is that his relationship with President Trump was what initially started the sell-off and the animosity towards the company, where people were, bombing factories and keying people's cars. And now his unpleasant relationship with the president is adding to further fuel to that fire. But let me just lay out a couple of things that I think are important to investors to think about. This is not a valuation stock. This is not a company you buy based on an attractive valuation. It's a narrative stock. And if you look at what's going right, you've got the mega pack electric utility grade battery storage business growing at 100% the previous quarter, year over year, 67% last quarter. A very profitable business for the company, and I think will continue to drive growth. Now, it doesn't replace or supplant the EV business, but I think what can revive the EV business is, in fact, robotaxi. I went to the We Robot event where they introduced the Cybercab. I mean, this is innovative, next generation, fourth industrial revolution kind of technology. And I think you will begin to see that the company is, in fact, the lowest cost producer when compared to Waymo by a significant amount per mile. And once the technology scales, and I think it was a pretty successful launch of the robotaxi in Austin a couple of weeks back, I think you will begin to see the story smooth out as it often does. And of course, robotaxi will increase demand for EVs. Last thing I'll say, Linda, is think of this company as Apple. The EV is to Apple's to the iPhone, and the ecosystem is in fact what you're really buying with this company.
Nancy, you talked about your top picks, and that includes Amazon. We ran a story on Bloomberg today talking about how Bezos sold about $740 million of shares. What might that suggest about the outlook for the company?
I don't think Jeff Bezos is trading necessarily on fundamentals. I think he's funding other interests and businesses. I think what's important to think about when you think about Amazon is the cloud business, obviously, and their embrace of robotics. There was a recent article, as I mentioned earlier, that said they're going to have 1 million robots very shortly, or already do, in the factories. That's important. They're going to be using drones to deliver packages. That improves productivity. And if you look at the company, revenues per employee are up 43% over the last few years, but they're still way behind all the other large cap tech companies in terms of margins per employee. So expect to see them continue to double down on other solutions like robotics. And that's, I think, what's going to drive the company into the next generation of outperformance for the underlying stock.
Nancy, all these companies that you mentioned are not really immune to Trump's tariffs. In fact, when you take a look at what we've been hearing from Jerome Powell, he talked about how the impact of those tariffs will only be seen in the data in June, July. Might you be underestimating then the impact on these companies from the uncertainties that we're seeing right now?
Yes, I might be. I think that is the risk that the market is teetering back and forth on. It could, in fact, be different than what we are expecting. And so that's why we've added exposure to other names. Old economy companies are going to benefit from some of these technologies and are somewhat tariff immune. So think TJ Maxx, Sherwin-Williams, Accenture to some extent, though they have issues with the government contracts. But I will point out that the Fed and Chairman Powell in particular, and it gives me no pleasure to say this, but he has been behind and wrong at almost every turning point. And I think the Fed's laser focus on tariffs has not served monetary policy well. We are seeing a number of areas of the economy disinflating. I think housing is really the trouble spot in the economy, and that could be solved very easily by Fed policy that may be eased modestly. Other side of that, Linda, is that a long easing cycle has historically been really good for stock price performance. So we're pretty happy with where we sit. We think there will be volatility this summer. As I mentioned, there often always is. But I think you want to use that to shore up your portfolios for the next 3 to 5 years.
Nancy, great insights. Nancy Tengler, CEO and CIO at Leffer Tengler Investments. Thank you. Coming up, a Thai court suspends Prime Minister Paetongtarn Shinawatra, raising fresh doubts about her political survival. Analysis with Chulalongkorn University professor next. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Thailand's Constitutional Court has suspended Prime Minister Paetongtarn Shinawatra while it reviews a petition seeking her permanent removal over claims of misconduct. The complaint alleges that her comments appearing to criticize the nation's army constitute a violation of ethical standards. The Deputy Prime Minister will serve as acting leader, with the court giving Paetongtarn 15 days to respond. Now, amid the political upheaval, Thailand's stock benchmark is the world's worst performer this year, but some think it could grind higher as the Prime Minister's suspension helps reduce political gridlock. Avril is here to give us some perspective on the market. Avril, to what extent can we expect resilience in Thai assets. We've seen that many times before.
Yeah, and I think that's exactly what investors are betting on. You have the likes of Citi expecting Thai stocks to grind higher with the easing of this political gridlock following the suspension of the Prime Minister. This could also help reduce the friction among coalition parties and cool the anti-government street protests. Maybe also helps investors to focus on the opportunities in the world's worst performing stock market this year, especially given how valuations in the Thai stock market relatively cheap at 12 times forward PE. And it's also worth noting that in past instances of political crisis in the country, we did see the market eventually post solid recoveries. And indeed, just a day ago, following the news of the suspension of the Prime Minister, we saw the stock benchmark rallying 1.9%, sitting flat today. Now flip the board, because that also seems to be the view that's been echoed by StoneX, that highlights that, Thailand's not really a stranger to political scandals in the past 2 decades. And it likened this recent episode to political theater. So it's really interesting that even as we see the Thai baht under pressure, it's been relatively range-bound, and the pair has also been more influenced by the moves in the greenback. Now flip the board, because that's not to say that there aren't longer-term political risks in the country. We have the likes of Bloomberg Economics highlighting that all this could add to the list of deterrents for foreign investors at a time when FDI at the start of the year had kind of been picking up. And this is all coming at a very sensitive time. Keep in mind, just a week before that tariff deadline from Trump, no clarity on how this suspension affects negotiations on trade deals. And the Thai economy had also been going through a bout where the tourism, the foreign visitor arrivals had been declining. There's a budget as well that has to pass through Parliament, all adding to economic challenges for the interim Prime Minister.
And add to that as well, Avril, persistent pressure on the BOT to cut rates. Avril Hong, thank you. Let's get insights from Titinan Pongsudirak, Professor of Political Science at Chulalongkorn University. Titinan, good to have you with us. Give us a sense of the possibility that Prime Minister Paetongtarn may stay in power.
Well, this is another convoluted crisis here in Thailand, Haslinda, and you're no stranger to it, and I'm too familiar with it. It's been going on for 2 decades, better part of it. Paetongtarn has been suspended. We've had a string of prime ministers that have been suspended like this over the last 2 decades. In her case, she could come back, but the record is not good. Only the coup leader in 2014, he was suspended, General Prayut. He was let back in. In her case, it comes from this leaked audio clip with Hun Sen that was compromising and damaging. But there were efforts to destabilize and unseat her for some time since she took office. So this became kind of the final straw, the catalyst. She could come back after 15 days of defending herself, and then the Constitutional Court, we hope that they will make a quick decision. Otherwise, if this drags on, Thailand will become intractable. I mean, your summary is very good about the economy, the budget bill, the tariff negotiation. So hopefully we'll see a decision one way or the other. If she's ejected, then we have an issue. The parliament will have to select a new prime minister and then move on from there. Otherwise, we have to see a new poll of some kind to return mandate to the people.
Of course, this is a coalition government. How much support does she have internally?
This is the first time in May 2023 that her father's party, Thaksin Shinawat's party, Pheu Thai, lost the election in 2023 for the first time. So the strength in parliament is not the same as it used to be. They used to win landslides in the past. So her coalition command is not strong, it's not firm. So the junior coalition partners have been squabbling over portfolios and allegations of corruption and so on. And Pheu Thai does not have really a firm grip on the coalition. In addition, Pheu Thai's signature policies that were advertised in the election campaigns have not been really implemented. Soft power, land bridge, 10,000 baht, digital wallet to boost consumption, and the FTA is also going very slow. And now we have the tariff negotiation. So even if she's let back in, I'm afraid she will be very hard pressed to regain her footing. And I have a hard time seeing her continuing to the complete term in 2 more years.
One key component in Thai politics, we know, is the royalist military establishment. It's made its presence felt in situations such as these. You got to wonder where they stand on this, whether they're likely to interfere, or not.
You know, we've had two military coups in 2006, 2014. These are the last 2 decades, right? And there have been a series of judicial interventions to set political direction. So there's a clear effort here, systematic pattern of interventions from outside to subvert and manipulate the election outcomes. As Linda, you've known this very well over the years. And it's very clear that the establishment forces around the royalist establishment, they are intent on unseating this government. I mean, we've seen this time and again. Thaksin Shinawat, Yingluck Shinawat, his sister, Pat Tongtan's aunt, and now Pat Tongtan. The military, I think, is reluctant to come in blatantly like in the past because the last coup did not do well. It was a disaster, in fact, for the economy. It's been languishing and it ran out of public debt to no end. So I think that military option is really the last resort. I think they've been using the royalist establishment, the judicial intervention. If you will, you can look at it this way. On the one hand, you have tanks and generals. On the other hand, you have the law and judges. So if you can use the law and judges, you don't need the tanks and generals. And this is what we're seeing.
You named several Shinawats who have been in power in the country. Is this a reflection, finally, of the decline of the Shinawats and their influence in Thailand?
Definitely. I think that the Shinawat appeal, the mass appeal, compared to 25 years ago, is nowhere near. And I think the Shinawat brand has diluted, and I think it could be finished. I mean, with Pat Tongtan's move, I think her audio clip also is very damaging for the brand, for the family. To herself as well. And, you know, they lost the election in 2023. We must not forget. In the next election, the Shinawat family name, I think, will also weaken. The masses, the voter base, also were upset by the fact that they betrayed the Move Forward party, right? The two top parties that won the election. The Pheu Thai, Shinawat family, betrayed that deal, the alliance, and joined up with the conservative establishment. So I think any way you look at it, the base of the Shinawat family in Pheu Thai has weakened substantially, and this will play into the hands of the opposition reformist party, the Prachachon People's Party, that won the election in 2023 and will likely win the next election.
Thitinan, of course, we've seen the increasing influence of the younger, more progressive political parties. Is that changing the political landscape and the thinking among the Thai people in any way? Might we see changes in the not-too-distant future?
That's a very good question, Haslinda. It's a big question mark. It's either you're going to see some change and reform, or you will see decay and stagnation in Thailand. Young people are unhappy. I think most Thai people are unhappy with what's going on. The economy is suffering. Jobs are not there, and we have really fallen behind peer competitors. We missed the semiconductor innovation buzz, and now the AI movement and so on, the innovation. And so Thailand is really becoming a laggard. Your summary in the beginning, that it's the worst performing stock market in the world, not surprised me at all. So young people, I mean, my students, for example, are looking for opportunities to study abroad, work abroad. Those that stay, 5 years ago, they protested against this kind of autocratic rule, manipulation, subversion, when their party was dissolved, and they would likely come back to the streets again. I just don't know when. If we don't see some kind of a compromise or some kind of a broad-based organic movement for change, then we really will see more and more stagnation and decay in Thailand, very sadly.
Thitinan, thank you so much for your insights today. Thitinan Pongsudirak, Professor of Political Science at Chulalongkorn University. Now, central bank heads from some of the world's biggest economies have gathered for a panel at the ECB's Monetary Policy Forum in Portugal. The panel, moderated by our very own Francine Lacroix, discussed managing challenges, including President Trump's tariffs and their impact on inflation.
Tariffs still loom large, so how do you see that developing?
Well, first of all, I would note that we are at 2%. And this is the latest reading. This is also the target that we have had, and this is the projection that our staff is indicating for the medium term, which is exactly what we had anticipated. So I'm not saying mission accomplished, but I say target reached. Okay? And I think we should start by recognizing that. We faced a massive amount of shocks, compounded shocks occasionally, and we are now through that disinflationary process that we have conducted over the last 2 years. And yes, we are facing a lot of uncertainty. Yes, we are facing the risk of fragmentation increasing. And yes, we are facing geopolitical developments that are worrying generally, but that also are causing two-side risk to inflation. So we have to continue to be extremely vigilant. We have to continue to be committed to delivering on our target. And I think we are at this point in time in a very good position to do that. So we are well equipped to navigate the tormented waters that we should anticipate.
The U.S. economy is in a pretty good position. Inflation has come down close to 2%. We're at 2.3 headline, 2.7 core. The unemployment rate is at 4.2%, so we're healthy overall. If you ignore the tariffs for a second, inflation is behaving pretty much exactly as we have expected and hoped that it would. We haven't seen effects much yet from tariffs, and we didn't expect to by now. We've always said that the timing, amount, and persistence of the inflation would be highly uncertain, and it's certainly improved that. So we're watching. We expect to see over the summer some readings, higher readings, but we're prepared to learn that it can be higher or lower or later or sooner than we'd expected.
But, Chair, would the Fed have cut more by now if it weren't for the tariffs?
So I think that's right. In effect, we went on hold when we saw the size of the tariffs and essentially all inflation forecasts for the United States went up materially as a consequence of the tariffs. So we didn't overreact. In fact, we didn't react at all.
What can central banks, in your position, do to shield economies from the impact of trade tariffs?
Actually, about the tariffs' impact on inflation, our current inflation is well stabilized around 2%, and we believe tariff tends to be deflationary rather than inflationary for 3 reasons. One is Korea is not likely to use retaliatory tariff. Second, we import 22% of our import from China, and recently export price of China has been falling at 5% a year for several years, and we believe that it will continue to do so. And at this moment, our growth rate is 0.8%, which is well below our potential growth rate. So aggregate demand pressure is much lower. So our problem is not the inflation itself, but the gross impact of tariff.
It's probably, Jay was saying, I think it's a bit too soon, I think, really to see the price effects coming through from the trade and tariffs action. We've made a point of saying also that, I think as Christine was saying, that these are two-sided. They could go either way. Could be weaker demand. We could see some supply chain disruption. And the second thing, of course, is that some of these effects, if you take the oil price story, it's gone up, it's come down, all since our last meeting, effectively. So, we always reach for the lexicon at this point. I mean, we've added unpredictability to uncertainty.
What do you see as the fundamental changes in your economy that make inflation more persistent?
So let me say, to put it simply, as you say, headline inflation has been above 2% for almost 3 years, while what we call underlying inflation is still somewhat below 2%. That's the situation we are in. But if I could decompose it further, there's probably about 3 components to it. First, there's underlying inflation dictated by wage price dynamics, whereby increases in prices affect wages, which further affect prices, helped by resilient domestic demand. This component has been going up slowly, but as I said, it's still somewhat below 2%. Then there's going to be perhaps a second component, which will be the expected negative effects of possible tariffs on the economy and on prices. We think the first component and the second component will produce a slow increase in underlying inflation toward 2% by end 26 or 27.
The world's biggest central bank is speaking at the ECB Forum in Portugal. Coming up, our exclusive interview with Apollo Hospitals as the company plans to merge and spin off its digital health and pharmacy businesses. Their managing director will be joining us next. Keep it here with us. This is Bloomberg. Let's do a check on Indian markets. This is how it's looking in the first few minutes of trading in positive territory, diverging from what's happening for the rest of Asia under pressure. The Indian rupee trading at 85.61 right now. Some say that the strength of the rupee so far will put a lot of pressure on the earnings margins of tech companies in particular. We're also keeping an eye on shares of Apollo Hospitals. The stock surged to a record on Tuesday after it announced plans to merge as digital health and pharmacy businesses and spin them off as a new listed entity. Citi Research says Apollo is trading at a 25 to 30% discount to some of its peers, mainly because of the losses in its pharmacy unit and a complicated business structure. Joining us exclusively, Sunita Reddy, Managing Director at Apollo Hospital. Sunita, good to have you with us. Talk about the prospects for the company amidst all the discussion and the trade talks between the US and India.
I think the prospects for the company are enormous. This is by far the largest healthcare omni-channel play in India. And when I say omni-channel, we should look at the lines of business. So there is the pharmacy business, which is 6,625 stores. There is also the digital pharmacy business, the online. The online business includes telemedicine, teleconsults, diagnostics, as well as concierge to the hospital and insurance. Added to that is the fact that this is, so far, it's been along with the hospital services play, where we have 72 hospitals. So in the composite scheme of merger, what we're doing is we're taking the retail business along with the digital health business and creating a new company. The composite scheme of merger involves the demerger of Apollo Healthco that includes the telemedicine. It also includes all that AHL represents, which is the omni-channel business. It includes the amalgamation into a new company and the amalgamation of KeyMed, which is the supply chain, creating a company with today's revenue is being around 16,267 crores, moving to 25,000 crores in 2027.
What impact would that have? I mean, you talked about, committing to capital outlays in the next few years. What kind of impact might that have on growth?
So in terms of Apollo Healthco and the new company we're creating, capital is already, Advent invested 2,400 crores for 12.1% of the company. And that company will grow with this capital. Whereas if you look at Apollo Hospitals, where we're adding 4,000 beds at a cost of 8,000 crores, growth will continue, 14% growth coming from existing businesses, and the potential to add 10% revenue growth coming from our new hospitals, which will come on stream in the next 3 years.
We've been talking about the demerger. First of all, talk to us about the thinking behind that move.
So the thinking behind the growth is definitely the structural demand for healthcare is huge. India is deeply penetrated in the digital space. So all of the formats of Apollo are moving closer to the consumer and making sure that we are digitally connected to the different formats of Apollo, which include primary care, secondary care, tertiary care. In terms of, as you look at the growth and the structure of the demerger, one is a retail business. And this retail business, with this, there is a huge value unlock happening because the shareholders of AHL get shares in the digital company. But beyond that, It is all about also creating synergies between the two companies and also a governance structure where, after we follow the first 3 steps of the amalgamation, we also create an Indian control company with the new company.
We know that Apollo is the largest player in the healthcare industry in India. How might that demerger impact and influence the healthcare sector in the country?
In terms of the healthcare sector, yes, it will give it much larger leverage because they already have 120 million customers in the digital space. So the synergies of capturing the 120 million and for Apollo Healthcare to continue to grow these numbers because they do about 900,000 transactions a day. They have already 40 million customers downloading the app. So definitely the reach and the funnel for Apollo Hospitals at this time is looking very strong with the creation of this new company and the synergies that will emerge from both.
There is emphasis on digital health. What are you seeing in terms of demand right now? And what kind of growth are you anticipating 12, 24 months from here?
So as we look at growth in the digital space, currently the company is clocking revenues of 16,200 crores. In 2027, they are looking at a target of 25,000 crores, which is very easily achievable. And but beyond revenues, like most companies, this is going one step further because it's omni-channel. It is clearly a very profitable play with about 1,700 crores with data emerging in 2027.
Sunita, might you be looking for acquisitions as you look to expand the 2 units?
Yeah, of course. We will continue to look at expansions. I think we have a very healthy balance sheet, which will enable us to make these acquisitions. Especially in the hospital space, we have done some acquisition. We will continue to do so.
So you're already in discussions, briefly?
We've just closed an acquisition in Bangalore. We will continue to look at acquisitions going forward.
Right. Sunita, thank you for joining us. Sunita Reddy, Managing Director at Apollo Hospitals Enterprise. And before we go, here's a look at our guests for tomorrow. We'll get more market analysis from Lombard ODA's John Woods. Plus, we'll hear from the president and COO of gaming giant Sega. You don't want to miss that. That is it for Insight. Horizons Middle East and Africa is next. Keep it here with us.